Yeah, I mean, I think what you're seeing, and it's more exacerbated right now, from a growth perspective, investors were betting on Chinese tech stocks. I mean, Baba, JD, and others, especially going into earlier this year. Now, what you've seen with this crackdown, that's really been much stronger than anyone expected from all angles. It's pushed more of that growth, more of those investors toward U.S. tech stocks. You have regulatory headwinds in the U.S., but nothing compared to China. And I think what you're seeing here is a rotation trade. And I think it's just another tailwind for U.S. tech, especially large cap, going into the rest of this year.
And you say you see U.S. tech stocks going up another 10% and the NASDAQ ending at about 16,000 for the year. I do want to ask, do you think that the reaction perhaps is a bit overblown? We had a CEO of an investment company in Hong Kong telling CNBC last night that essentially we're moving from almost no regulation in internet, and the pressure may seem high, but it's really just because of the low base. So is the reaction perhaps a little overblown?
Well, I think if you look at Didi in particular, I mean, that's a black eye for Chinese tech stocks. And that really, I think, has become the straw that broke the camel's back. And I think what you're seeing on the regulatory focus, you saw it on the Ant Financial, and of course now with Alibaba and others, investors just don't know. If you own these names Friday night, you don't know what you're going to wake up to on Monday morning. Yet on U.S. tech, of course, you have regulatory and some other risks, U.S.-China cold tech war. But right now, fundamentals, digital transformation, it's a risk-on trade. And that's why our view it continues to be that 2Q earnings is just going to put more gasoline in the fuel tank for the bulls.
And so, Dan, it's an X factor, as you say, that, we don't know moving forward what regulation is going to look like. I mean, would you say that it's safe to say that, if anything else, it will be more regulation and not less?
Yeah, I think we're definitely going toward more regulation, but I think in some areas it's more contained. I think if you look at U.S. in terms of large cap, that's something where you're going to see less M&A. I think a lot more scrutiny from an M&A perspective. But ultimately, if you look at a name like Apple, that's one where I think right now, from a regulatory overhang, it's a $15, $20 overhang on the stock. But yet, I think the bark's worse than the bite in the U.S. names. China, if you look at the news that's come out, it's really been a nightmare on Elm Street for any scenario, for any investor in these Chinese tech stocks. Especially, it's the biggest disparity we've seen, in a long time between U.S. and China tech names.
Shepard Smith here. Thanks for watching CNBC on YouTube.